All right. Hey, everyone. Mark here, Mark P Markets. Thank you all for joining me. I'm sorry I'm running a little bit behind. You know how it is with technology. But again, I appreciate you all joining me here today, this Monday. And many of you are regulars. So again, thank you. So let me explain to you what is going to happen in this stream so you have an idea of what to expect and how to get the most out of it. So first thing we're going to go over is the economic calendar. I see Alex and a few of you guys, you're ahead of me on that. Great job. We're going to talk about that. It's a heavy week, okay? So it's definitely an important thing to keep an eye on. So we're going to look at the economic calendar. Then we're going to talk about this Bitcoin situation, the title, the next buy area, or how to basically, how to prepare for the next buy signal in Bitcoin, which is a very important thing, whether you're a swing trader or a day trader. I want you guys to be prepared. So you know what to look for, because I'm going to talk about the previous trade that I called a week ago and how that thing basically generated a profit 2 times if you managed it correctly. Okay, it's a very important lesson. I wrote about that in my article yesterday on TradingView. Also, I wrote like a ton about that. Anyway, so we're going to talk about that. I'm also going to touch on the trade scanner, because for you guys that have access to it, you guys should be all over this thing, okay? Especially after what it produced on Friday. We're going to talk about that as well, okay? And then, of course, I'm going to get to your questions. So if you have a question about a stock or an altcoin, now would be a good time to share it in the channel. And then when I get to the Q&A portion, I will answer as many questions as I can, okay? So we'll look at support and resistance levels and other things, stuff like that. All right, so I am simulcasting here on TradingView. So TradingView people, if you can't see me, make sure you refresh the browser. That usually solves the problem, okay? So with that being said, let me just put this over here so I can see what they're saying. All right, so with that being said, let's get this thing started, shall we? This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, so let me just say hello to a few people. Alex, thank you for the feedback. Alex was giving me some feedback on how I can improve this stream. I'm always open to feedback. I realize I can improve things like my microphone and my camera and stuff like that. It's just a matter of, I just don't have the time to focus on that stuff right now, but I do realize it's important, and I will get to that. Okay, so Alex from Romania, it's good to see you as always. We got Vanja, good to see you. All right, we got Jay. Hey, Jay Watt, how are you? I haven't seen you in a while. I was getting worried about you. Have you seen the stock channel? Raman, good to see you. Johan, all right, cool. Peter, Levant from Turkey, good to see you all. All right, my TradingView people, they're usually like a little bit behind here for some reason. So I don't see anyone in there yet, but hopefully some people show up in there and all that. Okay, anyway. And for those of you that don't know, I am now considered a wizard on TradingView. Okay, I tried using my magical powers a week ago, but they don't seem to work very well. Anyway, they're gonna have to. I guess I'm gonna have to read the instruction manual on that. But there's only 5 of us, by the way. All right, cool. So that's a nice little thing. Anyway, all right. So first things first. You see my chart on the screen, but before I talk about that, we're going to talk about the economic calendar, right? So what do we have? Now, before I even asked a question, right, I got Alex coming out, FOMC. So, all right, let's get into it. Tomorrow is Tuesday. There's really nothing major. I think there was the Australia rate announcement, which is not really a big deal. So don't worry about that one. But on Wednesday, which is May 3rd, we have ADP, employment, whatever, ADP. That's usually like a preview to NFP. We also have an ISM services PMI. Those numbers are most likely coming out early in the AM, right? Early Eastern time. But those numbers are not going to be as important as the FOMC meeting, which is at 2 p.m. Eastern time on Wednesday. So the Fed comes out with their interest rate decision, and then they have their press conference. This is going to be very closely watched, all right, especially in the situation that this country is in right now. They're going to, so the market can react in a very dramatic way if there are any surprises. Why is this important? Because if you're carrying positions going into that, you need to be aware. Now, don't make the mistake of applying logic and say, well, I know what that means, so I'm going to do this. Don't make that mistake. Markets are going to interpret that number the way markets interpret that number. So you listen to the market, not what you think. So the best we can do going into such an event is mitigate risk. Okay. So if you have positions going into that and you're green in some of those positions right now, it might be a good idea to take something off the table. Or it might be a good idea to move your stop to break even, perhaps. Okay. Mitigate the risk. Now, there's a very important point that I need to make there when it comes to the trade scanner, because the trade scanner cannot see things like the FOMC meeting. All right. So it does not account for it. So it produced a list. I'm just going to mention this real quick. It produced a list of 20 longs on, it was like 20, maybe it was more, 20 stocks it produced on Friday at the close, which were for today's open. Okay. 20 stocks long. Now we saw where the S&P went today, and we saw where the NASDAQ went today. So I'm willing to bet quite a number of these stocks are going to close in the profit. Okay. We're going to take a look at two of them very quickly. But the point is, if you're in such a position, it does not account for the FOMC. So you need to be proactive. All right. Plus, the trade scanner is only good for a day or two, maybe 3. It's not something you hold on to for weeks and weeks, right? They're very brief, short-term momentum moves. That's what the scanner is looking for, or potential moves. All right. So anyway, so we have FOMC. That is on Wednesday. Now, Thursday, we have the ECB. Okay, they're having their rate announcement, their rate statement, or whatever. So it's the European Central Bank. It may have some movement if you're in Forex pairs that are crossed with the euro, possibly, right? So that's something to keep an eye on again. And then Friday, we have non-farm payrolls. Okay, I don't see anyone in TradingView. Are you guys watching me over there? Make sure you guys are watching me. Come on. I'm going to have to make some people appear with my wizard powers. Okay, I see some people are watching. They're just not saying anything. You guys are shy. All right, anyway, say hello or something. Oh, by the way, if you want to say what country or what city you're from, that's always a fun fact. I forgot to mention that. All right, I'm streaming from the greater New York City area, also known as Northern New Jersey. Hey, Milad, how are you? All right, yeah, I got to see Milad the other day. Okay, yeah, make sure Bloomberg shows up at the next one. Otherwise, you're wasting my time. I'm joking. All right. So anyway, all right. So we covered that. Now let's talk about the NFP real quick, because again, it's the same situation. Non-farm payrolls is the most important next to the FOMC. Non-farm payrolls is the most important economic event, or next most important economic event. Okay. Every month, it's the first Friday. You need to be aware of that number. Now, again, don't play logic with it. The market will interpret it the way it wants to. So again, it's the same story. You mitigate risk. Because of all these heavy events coming out this week, it's very likely that as the market moves closer to these events, you're going to see more erratic and random price action, because the larger players typically shy away. They don't want to put on more risk in the face of such great uncertainty. So you should also behave the same way. Okay, so be aware of that. Perhaps, instead of putting on swing trades as you get into these, perhaps you only look for more day trades so that your risk is more limited on those larger time frames. Does that make sense? Okay, so that's the economic calendar for this week. It's a heavy week. Definitely want to be aware of it. All right, next, let's move on to this chart here. And let me get bigger with the chart so you guys can see what's going on. There we go. All right, now, so before we talk about this chart, as you can see, I have the ATR on the chart. We're not going to need the ATR today, so I'm going to remove this. Okay, I talked about that the week before, and you guys, if you missed it, you can go check out my stream from the week before, and you can see what I said about it. All right, it was a very valuable lesson and something that I will be using to better track the trade scanner trades. Now, so I got Bitcoin up right now. Before we talk about Bitcoin, all right, what I want to do here is I want to talk about what the trade scanner called on Friday afternoon. Now, keep in mind, there are two channels. There's the stocks, and then there's the coins, right? The stocks produce a result every day between 4 and 5 o'clock Eastern time. It's at the same time pretty much every day if there's a result to produce, okay? And pretty much every day we find something in there. So there's always ideas flowing through there, right? And these are for swing trades, but you can use them on smaller time frames. the Bitcoin channel produces notifications whenever a signal is met or whenever the criteria is met. So that could be at like 4 a.m., that could be at 1 p.m., that can be at a variety of times. There's no fixed time for it, but it only focuses on the top 10 most capitalized coins. So you're not going to see some like weird, altcoin in that list. It's always the top 10. So let's go back to the stocks here for a moment. Before I talk about Bitcoin, which is very interesting right now, let's talk about AMD. Okay, you guys familiar with AMD? So the scanner called AMD. Now keep in mind, the scanner, what it does is it's a screener. Okay, that's what it is. And it calls a stock symbol and a price, a notification price. You have to fill in the rest. You have to figure out the stop and the take profit, right? And that's what the ATR was all about. But anyway, let's just take a look and see what this thing, how it called that trade, okay? Because clearly AMD is a well-known stock. It's typically a mover, right? So, I mean, look at this pullback. Interesting, right? So let's just talk about where it called it. It called the long on this candle, okay? So it wasn't calling the long from the bottom here, which would be ideal. But the way this thing is set up, it's usually not going to catch these. It's usually going to catch it after it confirms. And that was this candle here. It called AMD long. I forget the exact price. It was like 89 something. What is the close of this price? At 89.42. It was probably something around there. 89.42. Let's just say 89.50. On Friday at the close, it called this, right? Which means you had Saturday and you had Sunday to pull up this daily chart here before today's candle and figure out if you wanted to do something with AMD intraday, okay, or something, right? Well, so today, this thing, the open on this thing was 89, so it opened lower. The high was what, 91.36, okay? So there was some green in that. And as we know, these trades are typically good for a day, maybe two, maybe three. So if you're on top of this, right, and you managed to get this thing at 89.50 and you took a little pain on it because it gapped lower, right, it started a little lower. Let's take a look at this on a 1 hour chart real quick. Like, what was the intraday action like on this thing, right? Let's just look at today's action because realistically, that's where you would be involved, okay? So going back here, this is the pre-market, right? So let's go back to Friday. This is Friday right here, okay? This is Friday back here. So this is today. This is today's pre-market, right? So what time this thing started out at 89.57, okay? By the time the market actually opened, this thing, here's the market open, this gigantic red candle. All right, so you had a chance actually to get a better price. Again, if you were paying attention to this thing intraday, okay? So actually, if this thing would have been a pre-market play actually, right? Because if you bought this thing after the open, there was still some green possible, 90.31, okay, not bad. My point is, there was some profitable price action in there. The next question is, well, where could you put your stop and that sort of thing, right? That's like a key thing. That's where you can consider the ATR technique that I showed you. So just real quick, I mean, can I get that thing back on here? Let's see, can I call my ATR back on? It's probably gonna, hold on a second. Let's just see what that number gives us, just for tracking purposes. Okay, here, let me go back. There it is, right? So let's go back AMD. I'm going to get off this AMD once I show this example. So the ATR, this is the daily ATR, is $3.30 points. So of course, I teach people you should round that number, right? And you're not going to use 330 exactly. So we're either going to round it to 3 even or to 4. What I usually say is round it higher. So round to 4. So we're going to say 4 points, okay? We're going to say the ATR is 4 points. So we're going to, since this is a daily chart, right, I don't recommend multiplying the ATR. That's usually for smaller time frames. Again, I went over this in my previous week's video. You can check that out. But if we use one ATR, okay, let's just use one ATR. And let's talk about let's say you put your order today at the market open, all right, which was the actual open was 89 even. Okay, that was the official open of the market. So let's just say you put it there and you put your stop 4 points lower. Okay, so 4 points lower would actually be 89. So you're looking at 84, right? Or 85, I'm sorry, 85. So your stop would actually go somewhere around here, 85. Let me see, where is that on here? 85 is here. Okay, and then you multiply that ATR by 1.5. Now, obviously, that wouldn't have reached today. So 4 times 1.5 would be what, 6.5? I'm sorry. Yeah, 1.5 times 4, that would be 6, not 6.5, 6. So this thing never ran 6 points, right? So that trade would actually still be in play. So 89, that would put you at like 95, right? 95 on this thing. So that's what you'd be looking at if you took that trade today with some green in it. All right. Now, should you take the green? Should you take that money off the table? It's nowhere near its price, its take profit. It's not even at 1-to-1. It's not even up 4 points. So in a situation like this, you would give it another day, right, to see if this thing follows through. That's how you play something like that. Or if you don't like the idea and you're like, I don't like this pin bar that's developed here, you can just take whatever you got. I mean, this thing's at 89.78. It may be basically a break even at you. Take the break even, get out. Those are your two choices. Does that make sense, you guys? So that's basically, how you use this trade scanner. Now, and that's a real example that came off of Friday. And that's now you're playing this going into an FOMC meeting. So you have to keep that in mind, right? Because this thing doesn't know that. So I want to mention one thing about this. One of my guys actually took 10 random stock trades. Okay. He took a list of 10 trades and he basically ran through what I just showed you here, right? He just ran through the putting a stop and putting a target and all that other stuff. And that small sample, 10 trades is a very small sample, but I figured let's just get started and let's just see what 10 randomly selected trades would have produced. 8 of them were green. They closed green, or he was able to get his take profit, and 2 of them went to their stop, right? So it was based on a $10,000 account with 2% risk. He was able to show a $1,400 profit. Now, again, this was just on paper. He randomly selected, and I said, I want to see a track record. Just show me what this thing has been doing. And that's been over, I think he looked over a 1 or 2 month period. I think it was maybe a month and a half. I don't know, Alice, if you're here, maybe you could tell me about that more specifically. I don't see Alice here. But anyway, I thought that was very interesting. Okay, so we're going to track this more carefully as we go forward to see, what kind of numbers this thing is producing. But as you can see, there was some green in there. And the goal is to mitigate your risk and be proactive about these trades. You don't just set them up and walk away. Okay. So I just want to provide some insight and give you some idea of how that thing works. And I want to provide some instruction each week so you guys can use this tool. Many of you have access to it. So, I want you guys to really be comfortable with being proactive so you know how to manage these trades instead of watching them go from green to red, which can easily happen. Okay. Okay, cool. Hey, Natash, how are you? All right. So that's the trade scanner thing that I wanted to mention real quick. It also called, all the stocks are going to be green today because you saw where the S&P was. There was another one, TCOM, I think it was. I think it was this stock right here. I'm not sure exactly. It might have been this one. It called this one long too. And look, it's closing red. You see that? So the long would have been here at like 35.78. And this thing has a high of 36. So this one, not really, so not as eventful as AMD. But look where you're long from. It's generally a support area, a pretty significant support area. If that holds, that may be worth a little something. Anyway, so there was a list of 20 of these or more. There was a huge list, right? So I noticed AMD on that list, and I think it was TCOM I noticed on that list as well. All right. So if you guys have any questions about that or trade scanner questions, just send me a message. The best place to reach me, by the way, is in the community, right? The Discord community. There's a free membership. You could just sign up, right? Whatever, it's free, and send me a private message there. That's the best place to reach me, because when you send me messages on this platform, I don't get them. Like, it takes me a while to answer those. Okay. And I do want to answer your questions. So please reach out to me in the community. All right. Next, let's talk about Bitcoin, right? Because that's today's title, how to prepare for the next buy signal. And by the way, the scanner hasn't called Bitcoin long. I called Bitcoin long in this area right here. Okay. I sent that long out, which I wrote about in the TradingView article. I sent that long out on Tuesday evening. Okay. And when I sent that out, that trade was on its way. I had missed the entry. Okay. Because it's hard for me to watch this thing 24 hours a day. So by the time I got to it, it was at 28,400, and the entry was 28 based on my system. Now the robot was not able to call this because when Bitcoin has a move like this, or any market has a very strong bearish move, the robot is programmed to hold off and not continue to call longs, especially when the trend may be changing, right? And that's how the robot will judge something like this. So it stops calling longs. That's why it never called Bitcoin long, but I called it instead, right? Because I can use my judgment, and I recognized this level, all right? This was a high probability level, which I talked about over the previous 2 weeks. Bitcoin visited the level. Bitcoin offered a complex reversal structure, which is this failed low, double bottom variation situation here, right? That's what it delivered inside the reversal zone, where there was a high probability of that occurring. So all of that lined up, okay? And then it took out the pin bar. This actually, it's not a pin bar, it's this doji. It took out the doji high, which was 27,997, but I just basically said 28 even was the number, right? Now, here's the interesting part. When I called that trade at 28,400, and we can take a look at this on a 4-hour chart, okay? Because I'll show you exactly what took place. And by the way, the market followed my line, all right? Because that line was drawn in advance. So this is what the market looked like, right, back here when I called it. And it was pushing. It was like basically right here, okay? It was pushing. So I said, okay, you have basically two choices. You can use a limit order to capitalize on price noise and get a better price, right? While not, so you don't have to take more risk, or you can just jump in and place a market order if you don't have the patience, or if you'd rather just play the market order. Well, if you took that market order, right, the thing never pulled back. So the limit order wouldn't have worked at this time, right? You would have basically just watched it run away without you. And the take profit was 29,500 or 29,525, okay, which was right here, right around there, okay? That was the take profit, and it was determined at the time that I made the call, okay? That is where I put the take profit. So you knew this in advance. If you had placed that market order at 28.4 and you used the take profit that I suggested and the stop, well, that trade would have delivered over 1,000 points. Okay. Of course, if you made it more complicated and you interfered with it and you said, oh, I'm going to make more than that, well, then you ran into this candle right here, okay, which came out of nowhere. Now, the low of this candle is 27,231, right? This gigantic red candle. Now, here's what's interesting about that. If you had left the limit order in, let's say you went with the limit order choice. So I'm going to put it at 28 even. And you left that order in there the next day, which is when that candle developed. In fact, I was having a student meeting with Raman, and we watched this candle during the meeting unfold. And I said to him, and Raman can tell you, I said to him, if people left that limit order in there at 28 even, it's filled. And it may go straight to the stop. I hope people are at least careful with that. And it never went straight to the stop. The stop was at 26,959 or 955, or I forget, 26,950 something. Can't remember the exact number. This thing went to 27.2. Okay, so the stop was actually here, and it almost went straight to it, but never went to it. All right, so if you managed to leave that limit order in, this thing went back to the target, which was 29.5. That take profit never changed, right? So if you followed those orders again, it would have gotten taken out. So there was a possibility, if you were really on top of this, to play both, right? Like if you managed to take that market order and then you watch this thing, you know, get taken out, you take profit, and then it pulls back and gives you another opportunity to get in, right? You could have actually worked both if you were that in tune with it. So that was interesting. Now we're back to 28 even, basically, right? We're at 27,981. And I know the question is going to be, should we buy this now? Well, here's the thing. I would be very careful with this now. You know, here's why. We have a double top that's in place. Okay, let's take a look at that. Let's go back to the longer time frame. Here's why. Because it's the same level, but we have this bearish situation now. Okay, this 30K area, that's actually a lower high. All right, off of that 30, basically we can say 30K. It's not exactly 30K. In fact, I drew this blue rectangle, this blue square here, to represent the high probability fake out zone, which I wrote about as well. So this entire area basically is an area to avoid longs, unless you're looking to a day trade for 100 points or whatever, 200 points, okay. But otherwise, forget longs. You're buying into a resistance, right? So it's a really bad idea. There's a higher likelihood that people are going to sell in this area, okay, in this entire area. And especially since we have some evidence of that back here. So now we have the lower high. With the lower high in place, I mean, that actually changes my illustration here a bit. And I have to redraw that because the market never got up into this area. It rejected sooner. So with the lower high in place, it's probably a bad idea to go long now at this level, right? So now the best thing to do, again, the title of this stream is to prepare for the next buy signal. What should the next buy signal look like? And I'm going to explain that now. So we can get rid of this, and we can actually get rid of this little illustration here for now, right? For now, we'll remove that because I need to redraw that anyway. Because again, that's just an illustration of one potential scenario that I'm anticipating in the face of countless scenarios, right? The market is either going to agree with it or the market is going to reject it. In this case, it agreed with it temporarily, and now it's rejecting. Okay, no problem. So the next buy area I'm looking for is here. Okay, this area right here. Why this area? And what price is that? So that's like 26.5. Okay, the 26.5 price area. That, as my students can tell you, is a failed low region. Okay, so this area that I just highlighted here is a high probability location where price can find buying activity. Because why? Well, first of all, you have, it's a psychological thing. That's really what this is, okay? Order flow is nothing more than the expression of human emotion in the form of money, right? People placing orders and betting and putting money into, you know, putting money to work, right? So this area right here, this is what I like to call a failed low or double bottom variation area, where you have new shorts jumping in because they're looking at this support, or their oscillator is telling them, right? Go short, it's a breakout, it's breaking the support. So they all go there and they all short it at the same time. Of course, you have some big mouth fake gurus also telling them to short it because Bitcoin has a head and shoulders. Oh, look, there's a shoulder over here. You know, there's a shoulder over here. It's a head and shoulders. It's a short. So you're going to have a lot of shorts piling in. Meanwhile, you have old shorts that were shorting it back here, okay? And you have old shorts that were short back here who never got out of the trade, okay? Some people get out, but many stay in and they get stuck in this. They take a lot of pain. When the market comes back to their price, they get out typically because they're happy to break even. That's usually what adds to this pressure here and why I was calling this area as a potential long. So we got that squeeze. That's what this is, a squeeze, right? And that's a combination of shorts getting out, right? They start buying. And then you have new buyers jumping in, buyers who were anticipating that those shorts were likely to get squeezed in an area where they're likely to get squeezed, which was this area. So that took place. So it's like, all right, shouldn't we get a higher low now? No, now you're looking for that failed low again because you're going to have the same situation likely develop again. This is what happens when a market consolidates, right? You have these breakout traders who have no business shorting this thing at that level. They're selling into a support and they get caught, right? And then you're looking for the next leg higher. Now, why am I confident on the bullish side? Because what I'm describing here is a bullish setup, a bullish swing trade long. All right, so we know the price, 26.5 area. If I see the confirmation in that area, I'm going to call a long again. The robot, most likely, if we're pushing this area, the robot is not going to call that long because the robot looks for a short-term trend. It actually looks for a trend on multiple time frames. If one of the time frames gets bearish, which in this case, if this area right here, right, if the market pushes that low, the robot is going to say, oh, that's bearish. I'm not calling longs anymore. So the robot won't call it, okay? But I'll call it because it's a consolidation area, and it's I can see more than the robot can see. Obviously, I can use my own judgment, and I can see things that the robot can't. The robot can only see a very limited amount of things, right? It's not that sophisticated. A person, if you have experience, can see more. Unless, of course, I can program the robot to see that, but it can't see that. Okay, I'm not. My robot's not that smart. So, but I can see it. So the point is, I'd be willing to call that in anticipation that Bitcoin will be in a consolidation. Why am I considering that rather than bearish? And I'll tell you why. So when we zoom out a bit here, okay, this structure, and this is what the robot can't see. This is context, okay? That's context. That's structure. That entire structure is bullish. So until supports are compromised, meaning if I buy 26.5 and it breaks, and next thing I know, we're at 23 or at 22, then we're compromised. Then I'm no longer going to go long, and the robot will actually start calling shorts at that point, okay? And then that's when I stop calling longs. But that's when this structure is compromised. Until that point, I don't make any prejudgments, okay? Because this can easily be a higher low consolidation and reverse back to bullish and test 30K again. At this point, that's still a decent possibility. And I've seen markets like gold and stuff like that have done that for quite some time. All right, so that's the outlook on this thing. So everything I just gave you, I just gave you my game plan. I just gave you my perspective. All right, this thing is bullish. I'm looking for a failed low at support. While all the morons are calling for shorts, I'm a contrarian. I'm looking for longs, as long as the market gives me the confirmation that I need to see. No confirmation, I step aside. I don't just buy in front of a level. Okay, and for this type of strategy, I don't do that. So please keep that in mind. Now, let me know if you have any questions about Bitcoin and everything that I just said about Bitcoin. All right, and then we'll get to your questions here in a second. So just to recap on this thing again, we have a bullish general trend. Don't react to this because a lot of big mouths are going to be calling this short. All right, as a day trade, okay, sure, but not as a swing trade. You're going back into a support area, and that is your key support right now. That is it, 26.5. If it's cleared and we're seeing 25, 24.5, okay, then the party's over. Then your next support is really here, 25.2. So you can round that to 25, right? If that's cleared, the party is over. Okay, we're looking at a bearish movement, at least for the short term. Something like this something like that can unfold. All right. So again, a key lesson with all this is you have to realize, number one, as I always tell people, markets are highly random. There's no room for opinions here. People ask me all the time, where do you think Bitcoin will be in a couple of months? I have no clue. Markets are mostly random. Over the short term, like over a week or two, we can get clues and sort of shape a general probability of what is likely to unfold next. Okay, it can be wrong. Just like, look, there's two sides to a probability, right? You have the right side and the wrong side. So we may say, okay, based on this, maybe there's a greater than 50% chance that this thing will bounce off that support and test 30K again. But I can't give you an exact number. I can't say it's 65%. All I can do is estimate, okay, it's probably greater than 50%. Let's say it's 70%, right? Let's just say there's still a 30% chance that it may fail. Okay, think of it this way. Here's a good analogy to think about when you're thinking about markets and you're thinking about taking positions. And I'm talking from the swing trade perspective here. When you're looking at the weather okay? Before you even go to the weather report and go to the news, because that's what everyone, you have to check the news, all you have to do is look out the window, okay? And by looking out the window, you can get a pretty good idea of what the weather is going to be like, all right? So for example, you look out the window and you see a sunny, nice clear day. Chances are it's not going to rain, okay? But if you look outside and you see clouds and it's like, you see like it looks like it's going to rain, chances are it's going to rain, okay? So without even making things complicated and listening to an expert, you can make this determination yourself. Markets work in a similar way when it comes to estimating a probability, because that's basically what we're doing here, okay? But keep in mind, that's only relevant to shorter time frames, meaning a week, 2 weeks, maybe a month, maybe. You go further out than that, the market gets more and more random. And the reason for that is there's no way to account for some unexpected news item, right? Like, for example, we have FOMC on Wednesday. There may be a surprise in there that the market has not priced in. If there is a surprise, the market will adjust. So all these clowns and all these experts that have been making all these forecasts a month ago, okay, that report may make them randomly look correct, or it may randomly make them look incorrect. These guys, these frauds, they thrive on this, right? So the market will randomly make them right, and then they tell people, look, I was right, I was right, I was right. And then people think they know something, okay? It's a random game. That was like the big light bulb for me years ago that helped me immensely in this game, realizing that, you have to be more focused on defense because we're playing a game that's completely random. It's almost like a slot machine, okay? There's no such thing as a professional slot machine player, by the way, in case you don't know. All right. Okay, cool. So now I'm going to now start answering your questions. I think I've ranted enough. TradingView, I only see like 2 people. What's going on over here? By the way, TradingView and YouTube as well. If you like my content so far, please press the like button. Please press the boost button. Please press subscribe to my channel. I am planning to produce more quality content, not just these streams. It's just I can only do one thing at a time. Okay, so please, that's very helpful for me. Thank you for that. All right, so now I want to take your questions, and I'm going to go through the questions that I have that people have asked here in advance. Okay, I'm 15. I'm from, okay. You're 15 and you're from Iran? Okay, well, welcome. Oh, okay. All right, well, hopefully you learned something. 15, you probably should not be putting real money on the line at 15. But thank you for watching. There's a lot to learn, and definitely take your time. Okay, so let's go back here and let me see what I got. So Alex says, okay, there are a lot of stocks I like at the support prices and I like to buy. But if SPX, right, so we don't know, right? We don't know how that's going to be. There's going to be a lot of risk there with that FOMC. It can change things, okay? ACWI, ETF with 3,000 stocks. Okay, ACWI, let's take a look. ACWI, all right. I'm not familiar with this either. Joel mentions he's not familiar with it. I'm not either. It's on the NASDAQ. Okay. Oh, is this like the Morgan Stanley, whatever? They have like those world index nonsense ETFs. Okay. So first thing I want to do is look at the weekly chart. Okay. First thing you should do, if you're not familiar with an instrument, look at the weekly chart to just get a sense of trend and levels, which are the first 2 steps that I teach my students. Okay. It's part of the routine. Trend and levels. What can I say about this chart? Looking at the trend and looking at the levels. Well, the general trend dating back to 2020, we can argue is generally bullish. And this is a higher low over here. Okay, that would be the long term. The midterm trend, we can say, is tough to say. I'd say it's a consolidation, right? Because we have to consider all this as our midterm trend. So it was bearish, but now it's reversing, right, to potentially bullish. So we can argue that there's a consolidation, especially since you're at a resistance level, right? So that we can argue our midterm trend is consolidating or neutral. And then we could say our short-term trend is bullish, right? And this would be more of a short-term trend right here. higher lows, higher high. All right, now, so for swing trade purposes, we'd be more interested in the short-term trend. Now, that takes us to our levels. Let's go to the smaller time frame here, and let's consider levels on this thing. Now, I just said we're at a resistance. Where are our supports? This is all you should be interested in, okay? This is it right here. You have a support here as well. That's actually a minor support here. Let's put a line there. In fact, that support has been relevant for some time. Okay, I mean, look, that dates back all the way to here. Check this out. All right, that's interesting. Okay, so this thing is generally bullish. Yes, you have the higher low. The higher high, in theory, is what should occur, right? That's what is reasonable to expect. Higher high, though, till where? Where is the next resistance? Let's see. Let's just zoom out a bit here. It would take us to somewhere around here, right in this area, okay? That's your next resistance on this thing, which is 95.5. You can round that to 95.5. So that's some profit potential you can consider. But the thing is, you do have this resistance in your way, okay? What a lot of people do usually is they like to buy that breakout. They go, higher low, should be the higher high, right? That's what they do. That's Captain Obvious. Not my style, okay? So in a situation like this, Alex, I would, first of all, I would just keep this thing on the radar. I wouldn't take any trades. I wouldn't go long at this level. I don't like buying resistance levels, okay? I don't care how strong it is. I don't like buying resistance. If you want to play that game, if you want to buy that breakout, the way to compensate for that, obviously, is you go smaller, okay? Smaller. By the way, I get questions sometimes. People start asking me about, like, where I get some of these ideas from, or training and stuff. There's links in my description, and there's links in the show more area on YouTube. You can click on those areas and you can check those links. All the information is there. And like I said, if you have any questions you'd like to ask me, come into the free community, send me a private message there. That's the best place to find me, the best place to communicate. All right. So yeah, I would avoid this or go small and expect less. Really, that's all you can do there. Otherwise, Alex, you should wait for a retrace at least to a test of this level, which is the basically 89.5, 90 area, right? For like a minor retrace and reversal. That's your higher probability area. It may not go back there, but if it goes there, that's your opportunity. I mean, that's what you have to wait for. Otherwise, find something else, because I certainly don't like taking longs into highs like that. Okay, that's just my style. All right. So anyway, thank you for asking. Good question for ACWI. All right. Let me see what else I got here. Just running through this. All right. Okay. Cool. USD. Yes, Levant. All right. So let's start with, he was asking about the bonds. All right. So this is very important, Levant. I'm glad you asked about the bonds. The bond market is something you should always check, because this, if anything is going to forecast what's on the horizon, this is where you will find it. Okay. Not some clown telling you blah, blah, blah. It's here. The bonds drive everything. The bonds are like the center of everything. All right. So what are the bonds telling us? And there's a reason. That's not something I made up. That's not my invention. Okay. There is something called the business cycle, and the bonds are the driver of that. Okay. So anyway, 10-year note. And now look what's happening here. We do have this head and shoulders. Now, I don't make a big deal out of those classic chart patterns in that way, but I'll tell you what is interesting. The bonds are developing that pattern in an area where we've seen selling activity numerous times. So we have this head and shoulders situation back here, and we have one back here too, a mini one, right? All in the general same area. Why is this important? Well, right now, bonds look like they're poised. The 10-year note prices are poised to go lower, okay? Which means rates are expected to rise. And obviously the bond market must be expecting Powell to say something hawkish with a candle like that, okay? The bond market usually knows things. It's usually smarter than everyone else, right? And it makes sense when you have large institutions and governments. They're the people that trade bonds mostly. You don't have retail traders typically in the bond market, okay, in the treasury market. So the other thing with the bond market, so we got a bearish sign here. If this goes lower, rates are going higher. Higher rates are bad for everything. So what does that tell us about the S&P and NASDAQ? Probably not a good time to be in longs. Now, I just talked 30 minutes ago about my robot calling longs all over the place. So you have to put this into context. Those longs may produce a temporary profit, but do not have high expectations of stocks long if the bond market looks like that, okay? Now, here's the other thing with the bond market. The bond market has basically been in this range going back months, okay? That's a very wide range. The stock market has been all over the place, right? And the bond market just stays inside this range. My opinion of this is as long as the bonds stay in the range, meaning the bonds may pull back, right? And the bonds may pull back into this area here. The stock market may not react in an extremely bearish way. Why? Because the bonds have been here before, right? The bonds are not really doing anything that the market has not seen, right? So if that's the case, you may not get an overly sensitive stock market until, of course, the bonds start pushing lows. This is where you got to be careful, okay? So until then, that's why I said, you want to work with stocks, you want to take a trade maybe for a few days or something, you want to take some longs here and there, okay. But if the bonds continue to work their way lower, this is not a one-to-one correlation. Do not make that mistake. People say to me all the time, well, the bonds are this way, how come the stocks are like this? It's not a one-to-one correlation. The stocks are probably not going to react in a dramatic way until the bonds are pushing these levels, which will be new lows and new highs for interest rates, okay, which the stocks will not like. You have to understand, the stocks are adjusting to a lot of information. We have all these layoffs, all these corporate layoffs. The stock market loves that because that means more profit for the companies, right? Because they're laying off all these people. So please keep in mind, there are a lot of variables in play, all right? But the bond market can give us clues. And so right now, I'd be anticipating bond market push lower, and the bearish pressure may start to build on the stock market. That does not necessarily mean the stock market's going to push lows or be bearish out of nowhere. It just means that the bullish side becomes more and more limited as this thing pushes lower. Now, if this thing, for whatever reason, let's say Powell surprises everyone tomorrow and says something dovish, right? Let's just say, and you get a bond, you get a candle on the bonds that look like that. And that's over exaggerated, but you don't understand what I'm saying. Maybe over the next week, the bonds do that. That would actually be very bullish for the stock market, okay? Because that means pressure would be coming off, or basically we'd be seeing inflationary action, which the stocks obviously will react bullish to as our dollar becomes worth less and less and less, right? Stocks get more expensive. Everything gets more expensive. All right, does that make sense? Okay, so that's that. Now, so dollar, I'm not going to go over the dollar right now, Levant, because I want to cover some other questions, but dollar is going to basically, whatever the bonds do, like if bond goes lower and interest goes higher, that's going to be bullish for the dollar. Okay, here's what I'm going to do. I'm not going to talk about the dollar for 3 hours. But let's just take a look at the chart real quick because I suspect it's going higher. Yep, and it is, right? Double bottom off the dollar index. So that's going to be bearish for things that are against the dollar, like the euro. That's all I have to say about that. If I have some time, Levant, I'll spend more time on that. But that's certainly an important thing to keep in mind. That's also going to affect gold, okay? And that's why I won't touch gold in that 2000 area. Bad place for gold. All right, hey, Chris from Milan. Buongiorno. Buonasera. That's all I can say. I could say some bad words in Italian, but YouTube will probably ban me. Okay, Paul from Denmark. How are you? All right. Phil from Brisbane. Hey, dear. Hello, mate from Australia. I almost got British on you there. My mate from Australia, Phil Jones from Brisbane. That's where, no, 8cap is in Australia, but they're in Sydney. All right, cool. Thanks for joining. It's like, what, 5 a.m. over there? You're a trooper, man. Okay. Hey, Booty, how are you? I like your name, McBoatface. Cool. All right. All right, I'm just catching up here on the chat. All right, so let me go over to TradingView here. People are asking me questions. I'm sorry, I don't mean to be ignoring you. Let's go back here. Let me see what I see. All right, good content as always. Okay, cool. Cool, Drac, good to see you. I have a long position with leverage 10x. 28.5. Should I rebuy or cut? Oh, man. Okay, well, this is a tough spot, man. I don't know what to tell you for Bitcoin. Let's go back to Bitcoin real quick. All right, I hope you were paying attention to that Bitcoin stuff I was saying, because I mean you're long from 28.5 right now. We're at 27,838. You got long at a really bad price. I mean, you got. When I say it's really bad is because you're long basically with a lower high in place. So I don't know what to tell you now. I told you where I was looking to buy, so you're leveraged long. All I can tell you is maybe it would be a good idea to reduce the position, and so that your loss is smaller, while at the same time the thing is you're going back into a supportive area, right? But if you decide to hold that full position, you're taking a lot of risk, especially going into the FOMC. So again, I can't tell you how to trade, okay? I can't give you investment advice, but I can tell you what I would do. And I mean, for one, I would reduce the leverage. I would reduce the position and lock in some loss in case this thing breaks, so that your loss won't be so dramatic if it breaks. And if it doesn't break and produces a new buy signal, then that position part that you took off and you took a loss, you can put it back on at that point with more confidence. Okay, I mean that's one suggestion. You can also just get rid of the whole position and take the loss, which often the sooner you take the loss, usually that's the better idea. Okay. Again, we're going to a week with a lot of heavy economic news, and it's possible. There's no way to know in advance if this thing is going to break 25K. There's no way to know. Okay. But the possibility exists. You have to decide if you can handle that risk or not. If the answer is no, I can't handle that risk, then you need to start to mitigate that risk. That's more important. If you have to take a loss, take the loss. It's the risk that's important. If it turns around after you take the loss, well, that's going to happen sometimes. Okay, but don't sit there and hope. Do something. Definitely do something. All right. So I hope that helps. Have you read the Glassnode? It has suggested more investors realize profit grows. It could be. Okay, I don't read that, so I don't know. I don't go by stuff like that. Okay. In fact, I was telling someone the other day, I have no idea. I pay no attention to news. People that pay attention to news, and you're going to try to apply that to the markets, it's a big mistake, because you're grasping for certainty, and the news is the absolute worst place to get that information. Okay, you're just connected to the herd, and you're going to get fleeced like everyone else. That's the value of the news. Now, if you use it in a contrarian way, it can be more helpful, but that's hard for people to do. Okay, that's why I pay attention to no news. All right. I look at price action. I look at charts. I look at structure. And when the news is all calling for one thing and they're wrong, I'm on the other side of it. Okay. So that's all I can say about that. What do you think about Tesla? Okay. It looks like ABC. All right. So Milad's talking about Tesla. Let's take a look. TSLA. All right. Now keep in mind, this is a market stock. So whatever the market does, this is going to be affected, right? The S&P is up nicely today, or at least it was, and Tesla is red today. So here's the thing: you have to keep an eye on that, right? You are at a support level here. Okay, there is some sort of support here, Milad. You have that, okay? But the problem is when you look at a stock, you can't look at a stock in isolation, especially a market stock like this one. So it is a good idea to go take a look at the S&P and just do a comparison real quick. Look at this. The S&P made a higher high, okay? And Tesla is red. I mean, no, the S&P right now is minus what, 1.6 or whatever. So it's barely red today. Okay, fine. But look at this move over the previous couple of days. Tesla should be doing better than this. Okay. So S&P had that nice little rally, and this is all it can do. That's a sign of relative weakness. Okay, I'm sorry to tell you. So you cannot look at the stock in isolation. Yes, you have support, but you have a market that pushed its high basically, and this thing can't get out of its own way. If the S&P pulls back, this thing is more likely, probability favors a break of support. So that's what I would be saying about this right now. I would certainly, myself, I would not look for longs on this thing. I would look for a break of 150, okay, and test lows with the S&P comparing to what this chart looks like. I can understand you're looking at this, right? You're saying, oh, but that's bullish. Right. That's bullish. But if the S&P turns bearish or pulls back, this thing should be doing better than it's doing. And with that S&P move, this thing should be up here, okay, at least, and it's not even close. So S&P pulls back, this thing is likely to break. That's what relative strength says, and I would hold off until this thing gets more clear. Like, for example, a long situation for Tesla would be it tests that low, okay, 150, and then gives you a reversal here. Now that will be a double bottom. Okay, that would be worth giving. I would be more interested in giving that a try than trying to take something long here. Okay, so I hope that makes sense. Good question, Alad. Thank you again for asking. It was good seeing you. All right. Sounds like you're just gambling. Need to have a plan in place. Well, yeah, that's true. But most people, you know what, Drac Vor, most people don't have a plan. Most people just they just throw some money in and they hope for the best. That's the plan. Or they listen to some fraud who told them Bitcoin's a long, and then they get stuck in this, and then they start asking me for advice. You really need to understand, if you're going to put real money at risk, you really need to understand markets, and you need to understand, have a decent academic foundation, like know what efficient markets is, know what random walk means, know how to place orders, and know how to evaluate risk. If you don't know that, you really shouldn't be in the markets. But we do need people who don't know what they're doing, because that's where profit comes from. Okay. Sorry, man, like the guy that's losing, but that's how professionals make money. When people like you go in and they make trades in areas where probability is not favorable. Okay. Or they go in with no plan. Anyway, thank you for pointing that out. Lit. I can't read it. Okay. Can you please check lumber? Please just write lumber. Okay. Lumber. Let's take a look. Lumber. All right. Okay, here we go. What's the story with lumber? Ooh, that's a gap. All right, so I don't follow lumber. All right, let's take a look at weekly real quick. Now, lumber is typically tied to, construction and whatever, stuff like that. And so construction is tied to the economic cycle, because if people don't have money, they're not going to build new homes or whatever, blah, 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 right? So usually, this makes sense that lumber has been suffering over this recent time with inflation rising and all and the job cuts and all that stuff. This price action makes sense in terms of that. But this gap, so I see you're looking at this gap, right? And you're getting excited. Okay, well, forget the gap. Look at the price area, right? So for lumber to really turn itself around, you need to break 538 or basically 540, right? You're not even at that level. Where is this thing at? 465, right? Now that's the weekly chart. That's where we get that perspective from. So don't get overexcited about this. This is just noise. This is whatever, okay? Maybe some nonsense news came out, whatever this is. This is not a good place. Don't be buying this. That's all I can tell you. It's a high risk long, okay? Look at these resistance levels. If this thing is going to be a long, right, it needs to start breaking these resistance levels first, okay? You have a minor resistance here, which was cleared in that gap, but I would look for that gap to fill, meaning the next few days you see the pullback, okay? If you're interested in lumber, look for a support, not a resistance. Your support on lumber is 350 area. This line here is at 359. What is that? 368. So you could say basically between 370 and 350, right? That's where you should be considering lumber, somewhere in that area, if it can pull back there. Otherwise, don't touch this. Wait for some price action to develop. Let some structure develop. Does that make sense? Okay, thank you for asking about lumber. All right, let me jump over here back to YouTube. Okay, do you think the upcoming Fed increases will push BTC lower? Okay, so Bodhi, I have no idea. Okay, again, I don't go into this market with any opinion. I don't go into any Fed with any opinion. Powell is expected to raise by 25 points. That's all I know. Okay, what he actually does and what he says in the press conference is all uncertain. So you don't go into this with opinions. You let the market figure it out. He comes out, he says whatever, he takes his action, and you let the market figure it out. Obviously, Bitcoin is selling off going into that. So maybe someone knows something, or maybe people just don't want to take the risk, whatever it is. We don't tie logic to this. We just look at levels, okay? I told you my level that I want to go long. if I get the confirmation, and hopefully that confirmation comes after the FOMC meeting, then I'm interested. If that confirmation comes before the FOMC meeting, then that's going to be tricky. Okay, I may put like I may use like a limit order for something like that. But the rate this thing is moving, I would anticipate that if this thing is going to confirm for a long, it'll be after the meeting. Okay, I mean I'm hoping that. But that question that you asked there, that question basically assumes that logic is involved here. Okay, so we don't want to think in logic. We want to think in probabilities. Okay, hey, Nuhu, how are you? Okay, cool. I appreciate that. Thank you for watching. Thank you. Good example. Don't listen to news. Yeah, exactly. Never listen to news. It's one of the first lessons I ever learned, and I've been in this game a really long time. Okay, but beginners, they love the news. They love it. They think that they think they're being informed. Let me just say this. If everyone has the same information as you, it's worthless. Okay, let me just put it that way. Everyone has access to the news. It's worthless information. All right, if you have information that no one else has, then you have valuable information. Okay, Netherlands. Hey, Han, how are you? All right, good to see you. Haven't seen you in a while. All right, I was thinking about short on ACWI. Oh, short. Okay. All right, well, again, so short. So going back, I remember the chart. Going short on something like that, Alex, makes sense. It's going to be aggressive, though, because it may go for the higher high, right? You always have to look at both sides. And you have to sort of get like a probability, an estimate of the probability, right? The structure favors the long side. It may fail. If you see the failure, go for it, but just don't expect a lot because the general trend is bullish, right? So maybe going with smaller size or expect a smaller move. That's the way to play the aggressive side, if that makes sense. You have been on us. Now you're putting squiggly lines. Okay, that guy sounds like a troll. All right, yeah, I'm putting squiggly lines on my chart. That's right, because they've been showing where the market has been going. Anyway, I'm going to get rid of you. Really, you shouldn't be harassing me on my stream. Like really should have better things to do than that. Okay, Kai. The technicals are too bullish for me to short. Fundamentals are too bearish for me to go long. All right, well, that makes sense. You know what? If you have criteria and the criteria is not aligning and it says don't take action, nothing wrong with that. There's nothing wrong ever with not taking action. Okay, no problem. It's basic biology. Glassnode is okay, cool, Kai. Thank you for letting me know. I was not familiar with that. Jackson, if BC breaks below 26.25 with big red volume, I guess the bear rally is over, right? Bear rally? Okay, when I look at the weekly price action, it doesn't look like buy pressure is exhausted yet. Okay, here's the thing. So back to, we have Bitcoin here, 26 to 25. If it breaks that, well, forget the volume. Forget the volume. All right, the volume is not really very useful. I've never found it to be useful. It's really the levels and how price behaves around the levels. If you want to tie volume to that, but often the problem with volume is you don't really know the truth. Okay, there's a lot of hidden volume that takes place and things that we don't see. So I don't trust the volume, the volume histogram. That's why I don't put it on my charts. I look at the size of the candle. If there's any idea of volume, often the size of the candle will give you an idea on the daily chart. So when you look at the weekly price action, it doesn't look like the buy pressure is exhausted. Well, like I said before, the general trend is bullish on Bitcoin. Okay, so we can't say when we'll know that the buy pressure is over, the game is over when supports are violated. Until supports are violated or compromised, we have to assume that they will hold in a bullish trend, or it's safe to expect them to hold unless the market chooses otherwise. I don't go into this with any solid opinions. I don't go into this with any, I'm not married to any ideas here. Market changes, I adjust. I'm a listener. I follow the market. I listen to the market. I don't assert what I think because the market doesn't care what I think. I don't know anything. Okay. So I'm a listener. I'm a follower, and I only follow the market, no one else. Okay. So let me see. Okay, cool. Got that. All right. Okay. What do you think about RNDR chart? All right. Does it grow? Okay. So I'll take a look at that. Let me just see what else I have here on YouTube. I have to ask, what's your favorite? That's an interesting question. I have to think about that because I like to eat, Kai. So there's a lot of things that I like to eat. I guess I can. I don't know. I like what do you call that? Paella. I like paella. That's one of my favorite. Okay, Henry. Okay, AUD USD. Okay, let me see. I like your idea on the meme coin, PP coin. All right, Han. There always has to be a wise guy in my stream. All right, there always has to be a wise guy, PP coin. I've heard about that coin. All right, so let me take a look at RNDR first. RNDR USDT. All right, and then we'll wrap this up in a moment. Okay, so look, something like this. Go to the weekly chart. First thing, right? Especially if you're not familiar with the coin. I'm not familiar with this coin. And this is not something that the trade scanner will call because this is obviously not one of the top 10 capitalized coins. You have, I mean, this thing clearly, gave back most of its value, like most altcoins. But recently, look, I mean, it's got this higher low structure developed there. That's interesting. But here's the problem with it. As far as if you're thinking long, you're in a bad location. Look, I mean, look where you are. It's an old support, new resistance, bad place for long. All right. If you're interested in a long, look for a support area, and that would probably be this area right here. Okay, if you're looking for a swing trade long, that's around $1.23. Maybe we'll round that to like $1.20, maybe even $1. What's this low over here? 89 cents. Right. So $1 may not be a bad idea. If you're looking for a swing trade long, and you'd be looking for one more attempt, like in this area. Because here's the thing, you may say, but this is a new bullish trend. It might be, but this may be nothing more than a corrective move because you haven't really cleared any major resistance levels. Like you're not clearing this yet. If it can work its way higher through there, then maybe you have another story. But here's another thing you have to keep in mind with these altcoins. All right, altcoins are highly speculative, right? So in a rising rate environment, they're not likely to continue rallying. So you get sometimes they hype these coins, you get some nonsense going on or whatever, and then everyone gets in, right? But you're in an environment that doesn't support them. We need easy money. We don't have easy money, and the Fed still seems to be on this rate rising agenda of theirs. And we still have inflation. Like all their rate rising has still not fixed this inflationary problem. So I would not expect much out of these yet. Okay, we don't have the easy money yet. So that's something you always have to keep in the back of your mind. You cannot trade these charts in isolation. You do have to keep some of those things in mind, like what's going to affect this thing and how does that affect its potential. So if this thing has limited potential, you have to treat it that way. It doesn't mean that you don't trade it at all, but it means you work with lower expectations if you're thinking the long side. Okay, so that's RNDR. Okay, cool. So I hope that helps. I like to eat too. Paella is great. Yeah, I like salmon. Those kind of things. Can you please take a look? I like, you know what? I like eggplant rollatini. Now you're getting me to think here. All right, can you please take a look at okay, so here's the thing. Yeah, I've been at this now over an hour. I got to wrap this up. So listen, people, I apologize if I missed your question. I apologize sincerely. I mean, I'm on here every Monday. Also, you can send me a private message and ask me a question that way. Go into the community because people send me messages on here. It takes me forever to respond. So go into the community if you have any questions there. Otherwise, come back Monday and ask me again. I'll be happy to answer a question. Again, if I missed your question, I sincerely apologize, okay? But I got to keep these at around an hour. So again, I want to thank you all for watching me. I hope you got something out of the stream here today. Again, do me a favor. Press the like button, press the subscribe button, press the boost button, whichever platform you're on. That always helps me out a lot, all right? So again, enjoy the rest of your day, the rest of your evening, wherever you are in the world. And I want to thank you very, very much for watching. Enjoy the rest of your day. Thank you again for watching, people.